I'm going to pull up just a headline from Market Watch that I think puts it well. Wholesale prices are flat in June, PPI shows, and point to muted effects of tariffs on inflation. This is what JD Vance is saying, is that, this is, if anything, a leading indicator that prices are going to go down if the inputs at the wholesale level are lower. All the economists were wrong,
Right.
and tariffs are not going to drive up your prices.
Yeah.
What do you say to that?
Yeah, so there's two big problems with that. And big shout out to the economist Ernie Tedeschi, who's now with the Yale Budget Lab. He had a great thread on Twitter on this today that hit the two big points. The first point is that PPI does not include imports. So even though you expect domestic prices to track higher import prices, it is weird to talk about tariffs and the PPI and kind of on that basic point. The more important point is that, as Ernie shows, you actually are seeing exactly what you'd expect. Goods prices increasing, services prices decreasing. Goods prices, of course, are the things that are going to be affected directly and immediately or more quickly by tariffs. Services are, again, assuming a consistent monetary and fiscal situation, what you would expect to see decline. And it's precisely what we've seen. So the fact that some professional forecasters got their prediction wrong of the overall level doesn't change what's under the hood, right? And what's under the hood are pretty much what you'd expect, again, giving the delays and lags and all that other wonky stuff I already talked about.
So Scott Bessent, the Treasury Secretary, said at a cabinet meeting that the government might take in $300 billion in tariff revenue this year. The Treasury basically reports more than $100 billion so far, which is the greatest amount that's ever been raised through tariffs. I believe in the past, it's roughly $50 billion a year is sort of the general standard. You can feel free to correct me if I'm wrong. So we're already double a sort of standard year. And this is 5% of all tax receipts for the month in June. And it actually has generated a budget surplus for the month, which is all very uncomfortable for libertarians, right?
Yeah.
But there's been this plan offered by, Team Trump all along, which has been basically, slash personal income taxes, try to cut income taxes to the greatest degree possible. And then the way we're going to fund the federal government is through tariffs, tariffing the heck out of people.
Yeah.
First of all, is this desirable from a libertarian standpoint? Like, is there any world in which that would be desirable? And two, if that is their sort of stated goal, are they kind of doing it? In fact?
Okay, so there's a lot to unpack there, but let's start with the budget surplus. That was fake, a statistical anomaly due to the monthly reporting. We get a lot of money in for the month, and it just happened. But if you look over the actual last year,
headline number, but not really, that should not be people's takeaway.
Right. If you look, because you have to look over a 12-month period, we're still in a massive hole. There is no forthcoming. We're not going to wake up a year from now and be like, wow, we have a magic budget surplus. We had a magic budget surplus for the last year. You get it for 1 month, and then it gets consumed by deficits for the rest of the year.
As a girl who struggles with her budgeting, as I've already mentioned in this podcast, let them have this one. Damn it.
No, I refuse. There are bigger problems, though. The first, as we already said, is that even assuming a rather optimistic take on foreigners paying some of the tariff costs by lowering their prices, you're still looking at the vast majority of those billions coming from American companies and consumers. So this is just taxing. It's just a new tax, just new tax revenue being paid mainly by Americans. So let's say 300 billion, 80% of that is coming from Americans. We just are celebrating a $240 billion tax increase that, of course, was implemented unilaterally by the president without any input from Congress or various businesses, you name it, it just was slapped on there for whatever reason. So that's.
But I mean, but hold on, it was the latest bill that just passed is reducing other taxes. It's reducing certain income taxes and
I'm
corporate
making
taxes.
out like a bandit with salt
So
deductions,
is
right?
is the swap actually beneficial?
Well, so you're certainly going to get some benefit from the tax cuts, but the people hurt most by tariffs are the poor. The poor pay the most of their disposable income towards tradable goods, and thus tariffs are a very regressive tax. The biggest tax cuts were, and the poor don't pay any income taxes, right? So leaving aside the taxes on tips and Social Security, that gets really off the reservation. In general, swapping into income tax cuts for tariff hikes is going to be very regressive. So it's going to be good for wealthy folks. They're going to they win. It's going to not be so good for poorer folks who weren't paying much income tax and are going to be paying tariffs via higher consumer prices. So that's
But hold on, isn't this part of some people's argument against the flat tax, which Rand Paul has historically been into and lots of libertarians have advocated?
Well, yes and no. So if tariffs were a flat consumption tax, then you could make that argument, but they're not. So tariffs are a really narrow tax that isn't actually on end consumption, and it gets distorted all through the supply chain in all the ways we talked about. It's also a very narrow tax base. Imported goods are only roughly 10 to 15% of all of our consumption. So there's this 85% that's not getting taxed at all. That creates all sorts of distortions in how we spend our money, how businesses do their business, and it funnels economic activity towards less efficient enterprises. So put more simply, an ideal tax is going to be really flat, so no carve outs, very broad tax base at a very low rate. And that's going to be very transparent. You're going to know what you get. You're going to know what you're going to get into in advance. Tariffs check off 0 of those boxes. Okay. They're not transparent. They're applied at the border and then filtered through all these supply chains. They're also matched by price hikes by domestic businesses. So they're kind of this invisible tax that consumers pay, but doesn't actually end up in the treasury at all. They have a very narrow tax base, and to raise a lot of revenue, they have to be very high, and that's going to be very distortionary for economic activity. So as a pure tax policy, tariffs are terrible for that. You're not going to find any tax wonks that are like, this is the great way to fund the government. And then the final problem is that $300 billion is a drop in the bucket for federal spending. It wouldn't cover a single major part of the budget. It wouldn't even cover the interest on the debt these days, right? So it's, if you celebrate, I'm not one to really celebrate, yay, we're getting more tax revenue, but even as a simple paying in the budget situation, it's not raising that much money. You still have to deal with spending. You still have to deal with entitlements and all these other things that nobody wants to touch. The big, beautiful bill didn't touch, other than a tiny bit on things like Medicaid. And so we're still in a giant hole, and we're just collecting money in a much less efficient way than like a flat income tax or a flat consumption tax.
Okay, but is there any credence to this idea that obviously we saw initial stock market turbulence from Liberation Day, which liberated so many of us from our stock portfolios and any assurance of a healthy, decent retirement? But, so we saw stock market turbulence then. It has in many ways recovered since then, which is huge. But, now we're seeing markets react somewhat favorably, maybe not specifically to the sort of weird patchwork that's cascaded upon us of tariffs, but this mixture of things, the domestic policy bill passing, The fact that there are some income tax cuts which end up, ultimately going to the upper middle class and the rich. But still, I mean, we haven't seen market bloodbath.
Right. No,
Is
sure.
is this looking like there's some secret sauce in the Trump economy where like all of us are looking a little foolish right now? And it very well could be the case that several months from now, we're all vindicated. But, is there anything to the Trump defenders' defense that like, actually it's not nearly as bad as the sky is falling chicken little folks were claiming?
Yeah, no, and I think that that's exactly the right way to put it. It's not as bad as some of the catastrophic rhetoric. Fortunately, not for me, and it's not as bad as investors' worst fears because I think part of what the Liberation Day sell-off was a worst-case scenario situation. Extremely high tariffs that Trump has since walked back. I mean, yes. 10 to 20% is still very high historically, but it's much lower than the 40 or 50% that was being threatened on Liberation Day. More muted foreign retaliation, foreign governments that have actually been kind of smart about not butchering their own economies with their own retaliatory tariffs. And some of it is about simply expectations. Trump has, to his credit, brilliantly, whether intentionally or not, moved the Overton windows so far into tariff crazy town that now when he's pulling back on that, markets are like, yay, that's a win, right? Because it's not the worst that they were expecting. And markets are very much about what's coming, not what's past. But there was other, I think, bigger points. And this is something I'm glad I have stressed on Twitter and on other podcasts and writing, is that we always need to remember the United States is a massive $30 trillion economy that is mainly fueled by services industries. Most of those are not directly affected by trade policy, and particularly not goods tariffs. And we have a lot of tailwinds, not just the general strength of the U.S. economy, which has been pretty strong for a while, but we have a very dynamic and flexible economy that can take some punches and keep rolling. We have tailwinds from AI. I mean, this massive AI boom that everybody keeps expecting. The Trump administration is enacting some good policy, whether it's energy deregulation or the excellent full expensing that the big, beautiful bill put in, allowing immediate deduction of business investments. These are good policies. So you put this all together, and it makes sense that the stocks are not tanking. Now, does that mean it's good policy? No, it just, the way I have often described it is, I mean, I can cut off my pinky and still live a pretty normal life. That doesn't mean cutting off my pinky was a good idea. It just means it wasn't catastrophic, right? It didn't kill me. You don't celebrate your amputated pinky. And that's important to remember, because it really is a lot of the tariff defense is, see, it's not so bad. Well, great. It's still not good. It's just not catastrophic.
It's also so premature for them to be claiming that, right?
Yeah. There's also a big risk with this type of victory laps, because I do think markets are a little too optimistic right now about all of this. There is this kind of taco mentality. Trump always chickens out. Is problematic, one, because I don't think Trump does always taco. But second, there is I've called it the taco trilemma, or the taco paradox. And that is that Trump only backs down when markets tank, but markets aren't tanking because they expect Trump to back down. But if markets don't tank, Trump's not going to back down. So we could end up in a situation, and I think we will end up in a situation this fall with very high tariffs, historically high, 20%, 18% on average. That would be the highest since the early 20th century. It would be extremely significant for not just prices, but for growth and investment. That's not good. it's just not exactly clear how it's going to be reflected in, like, the S&P, right? It's still just not, it's not going to be good.
That was a clip from Just Asking Questions. You can watch another one here, the full episode here, and subscribe right down here.